name is Rick Van, I'm President and CEO of Contango Ore. We are about ready to start production here next quarter and generate a lot of cash flow, about $50 million of cash flow. So as E.B. Tucker said, we're going to go surfing. So we're in Alaska, Tier 1 jurisdiction, always consistently top 10 jurisdictions in the world for mining. Our Manh Choh mine, high grade, 8 grams per ton. It'll be one of the highest open pit gold mines in the world. We've really de-risked the project, and we've taken a proactive approach on how to de-risk the project. We entered into an agreement with the Tetlin tribe. It's private land owned by an Alaska Native tribe. We're fully permitted. We have all of our state and federal permits. We have a proven operator and our joint venture partner and manager of the project in Kinross. We chose them because they have an underutilized mill at Fort Knox, and we're basically taking advantage of their excess capacity at that mill, which is fully permitted, been operating for 30 years now. It's a turnkey operation. All the major contracts are in place. Contracts for mining, contracts for transporting the ore up to the mill at Fort Knox, and the milling contract with the Fort Knox operation itself. So we've put in place a $70 million line of credit with Macquarie and ING. So we're fully financed. We've been mining since July of last year. We're stockpiling ore. We're stockpiling at Manh Choh. In November, we started transporting it up to the mill at Fort Knox and building a stockpile, which we plan to batch process here next quarter. So that'll generate a significant amount of cash flow and put us in a relative strong position in this continued sluggish market. So we'll talk about what our plans are there as well. Just a location map. The Manh Choh project is the gold star next to the Yukon border there. The red star is the mill at Fort Knox, 240-mile drive on the Alaska Highway. It's a paved highway. It costs about a little over a gram to transport the ore up there. We've got 8 of them, so we've still got 7 grams to make money with. A number of other early stage exploration projects located in green. The one I want to draw your attention to, though, is Lucky Shot, the other gold star there north of Anchorage. Lucky Shot, historic mine, mined high grade. We've outlined a modest resource to start with, but very good grade, just around a ½ ounce per ton. It's an underground mining situation. I'll give you some details on that, but we want to do the same thing we've done with Manh Choh with Lucky Shot. Take advantage of that underutilized mill at Fort Knox. So we'll talk about that more. Just quickly on our share structure, we're not a Canadian company. We're US listed, NYSE American. We have less than 10 million shares outstanding, and that's not because we rolled them back once or twice. It's because we've been very prudent about issuing shares. We have, as of last accounting, $16 million in the bank. We spent money since then, but we're well financed. We have a $70 million line of credit. We've only used about $20 million of it. We have a $20 million convert. You can see management and directors are seriously invested in this company. I own about 8% of the company myself. We had our opening of the mine in July. Chief Michael Sam from the Tetlin tribe and other council members were there. Governor Dunleavy from Alaska was there. And of course, it was a great event to see groundbreaking at the project site. We've been mining since July, about 6 months now. We started transporting the ore with highway trucks in November. We'll be transporting now. I think we've got about 16 trucks and trailers working. By the next month or so, we should have a full complement of about 50 trucks hauling ore 24/7. They go up the highway, they dump the ore at the Fort Knox mill and form the stockpile there. We're going to form about a 250,000 ton stockpile before we start batch processing. Expecting right now, based on the schedule, first batch process probably in May. At Fort Knox, our average grade is 8 grams per ton. The average grade of Fort Knox is 0.8 for the mill, not the heap, that's lower. So we need more capacity for cyanide, more capacity for lime, more capacity for carbon. That's just tanks and piping, so it's all pretty easy stuff. All the outside work's been done. It's mostly all inside work now, which is a good thing because it's about 20 below this morning. But that should be wrapped up here in the next one or 2 months. And then, as I said, we'll be ready to start commissioning and batch processing. Based on the feasibility study, this project will generate about 225,000 ounces of gold a year. Our 30% share will be about 67,500 on average. Our all-in sustaining cost, $1,116 an ounce. So we'll have about a $900 margin at today's gold price. We've spent all the capital. There's very little, no real capital spending going on right now. It's mainly working capital, mining, transporting the ore, and building the stockpile at Fort Knox. So next stop is production and cash flow. Snapshot from the feasibility study. 1920 gold price at the time was the highest gold price we could use. But it's not a bad moniker. We'll generate well over $50 million of free cash flow. Roughly 10 million shares outstanding. That's $5 of free cash flow per share. So that'll be a high-end milestone in the industry. We've hedged part of our gold as a result of the arrangement with the banks, which is, I think, fully expected. We have a number of other early-stage exploration assets, but our Tetlin lease itself is over 67,000 acres, or sorry, 675,000 acres. So it's roughly the size of the state of Rhode Island. So we have lots of exploration upside there. The one I want to draw your attention to, though, is our Lucky Shot project, which I mentioned earlier, just north of Anchorage, and just off of the Alaska Railroad that operates between Anchorage and Fairbanks. So this was a mine that was in production in the 1920s to the 1940s, produced about 250,000 ounces of gold at ounce and a quarter per ton, very high grade, narrow vein. We've been exploring it in a modern sense. We've got all the underground development in place. We're averaging about half ounce per ton. We've outlined about 100,000 ounces so far. It takes a lot of drilling. And our plan is to get back up and drill up on the mountain and underground this summer, and then through the fall and the winter. And we can once we're underground, we can operate year round. Our objective here is to outline about 300 to 400,000 ounces of gold. Put a mine plan together, and again, take advantage of that big mill at Fort Knox. Load the ore in boxes. Drive them down to the railroad, haul them up to the Fairbanks, and haul them up to the Fort Knox mill for processing. We'd have to work out an arrangement with Kinross, but they're open to receiving additional ores, particularly if they're higher grade. Now, what else can we do? Pierre Lassonde, a well-known investor in Canada, and identified in the 80s, I think, the Lassonde curve. And this applies in the 80s, but it applies today as well. Excitement and discovery. You get a bunch of drill holes drilled, exciting results, but then comes the hard work. You've got to do your infill drilling, you've got to do your metallurgy, your pit slope stabilities, how much water you have. Do you have too much water, not enough water? That's all the hard slog work, and unless a major company is going to take you out, you've got to do the work to demonstrate that so that the major company can take you out. If you do all that work, you get on the other side of the valley of death, and you get to the plateau of evaluation based on earnings. In the 80s, this valley of death was 2 to 3 years long. Today, that valley of death is 5 to 10 years long. So Contango was able to get through that valley of death very quickly because we didn't build a mill, we didn't permit a tailings facility. We took advantage of what was available at Fort Knox. So we did the same thing, we just did it much quicker and for much less capital than we could build our own mill. There's a whole group of companies out there that don't have that ability. We're going to generate $50 million of free cash flow. We're going to look at opportunities that have good quality ounces, that have infrastructure. That's an important thing in the mining business. We're going to look at opportunities where you can either you have good enough grade that you can do a direct shipping ore, or you can take advantage of somebody else's mill. That's our game plan. We've done it at Manh Choh. We're planning on doing it, and we're lined up very well to do that at Lucky Shot, and we think there's other opportunities like that to grow the company and grow our leverage to gold, which I think is going to be important if E.B. Tucker's right and we have $5,000 gold. So I'll stop there, and thanks very much.